We are here again on my channel, Survive and Thrive, and today I want to cover a company that I've previously done videos on, and that is one that is involved in the metaverse, and it's one that you want to take a closer look at and see if there's an opportunity for you to invest today. That company is Matterport, ticker symbol MTTR, and if you don't know much about this company, it's one that is involved because it does digital twins of buildings, and they've used it from everything from construction to architecture to real estate, opportunities to be able to warehouse plan, and others. And so the previous times, you can take a look at this suggestion link above, that I covered this company in particular was back in November of last year, and most recently around mid-January. This first article, Motley Fool, here's why Matterport stock plunged following the Q4 earnings release, and we will get into detail on what the current price is today. But as the key points, fourth quarter revenue grew 15% year over year, beating the 6.4% growth Wall Street had expected. The quarter's bottom line slightly missed the analyst consensus estimate. First quarter and full year 2022 guidance was much weaker than analysts had been projecting. One major impact that is happening across the board for a lot of companies out there is global supply chain issues, and that hurt the spatial data company's fourth quarter 2021 top and bottom lines and are expected to continue throughout 2022. Now, as you can see, Matterport stock plummeted 14.3% in Wednesday's after-hours trading session following the spatial data company's release of its fourth quarter and full year 2021 results. The market's displeasure is attributable to fourth quarter earnings falling slightly short of the analyst consensus estimate, along with first quarter and full year 2022 guidance coming in considerably lighter than the street had been expecting on both the top and bottom lines. The market looks ahead, so the disappointing outlook is probably the biggest factor in the stock sell-off. Now, just to quickly touch on Matterport's key quarterly numbers, if we compare Q4 of 2020 to 2021, revenue $27.1 million, up from $23.6 million. And then you can see that operating income, $95.3 million in the negative, widening their loss 3,304%. At net income, widening their loss 5,094%. And you can see that there is just a significant hit to every one of these metrics, which causes a lot of investors anxiety and reasons to sell. But for those who are looking at this company as a long-term play, it's a great time to buy in. As always, do your own research. I'm not a professional investor, so you want to take the time to really understand the vision and when a good time to buy in is. The huge net loss was largely driven by the costs associated with the company going public in July of 2021. Wall Street was looking for an adjusted loss of 9 cents per share on revenue of $25.1 million, as has been outlined in the earnings preview. So Matterport beat the top line expectation but slightly missed on the bottom line. For context, in the third quarter, revenue grew 10% to $27.7 million. This result missed the $29.1 million Wall Street consensus estimate, but only because of pandemic-driven supply constraints. So here's what management had to say. Part of CEO R.G. Pittman's statement in the earnings release. In 2021, we doubled our subscriber base, increased spaces under management by 54%, and subscription revenue grew 47%, with total revenue up 29% for the full year. Relentless innovation is the norm at Matterport, and with new products like Matterport Axis and Matterport for Android, they are racing to bring precision 3D capture and digital twins to everyone in the built world. Every industry on every continent is embracing digitization, and I am more confident than ever about the company's outlook for 2022 and the decade ahead. So that's the mindset you have to have, especially when you're investing in a company such as Matterport, is where are they going to be in the next 10 years? And my personal opinion is that they will be one of the leaders. So that's why I'm looking at every one of these opportunities as a time to add and continue to build out my position. In yet another article in Investor Place, don't be spooked by the dip in Matterport, a stock that could have 100% upside. The company will increasingly virtualize physical spaces over the next several years, and revenues will rise. So this article, February 18th, that was an ugly day for the market thanks to what is happening with the Ukraine-Russia conflict. And this resulted in companies across the board having an ugly day, especially for Matterport. The hypergrowth 3D imaging tech company reported subpar earnings, as we just covered, and its stock dropped more than 20%. But among the wreckage, this is being looked at as a golden buying opportunity. So let's take a look at how they think that this stock in particular could surge more than 100% higher over the next few months alone. So this is a commercial play on the metaverse. They were founded in 2011 with the intent of creating immersive 3D digital twins of physical spaces. And their idea is that by creating a spatial data library of the world's physical places, location owners can glean unique and value additive insights to better manage them. Now you fast forward 10 years later, Matterport is executing very strongly on that vision. Today, the company has over 500,000 subscribers who have collectively virtualized about 6.7 million physical spaces using its software. And these are customers that I hadn't previously known about, but those include Redfin, who uses Matterport's tech to digitize for-sale homes and allow prospective buyers to take virtual tours, as well as Orange Theory Fitness, who uses Matterport to virtualize their fitness studios and optimize the use of equipment. Matterport's long-term vision here is to virtualize every physical space in the world as companies more fully embrace the metaverse. So you can see how really this will tie into that bigger theme, and they will be one of the major contributing companies to this effort. And there has been discussions about Matterport being involved with Facebook, and we know that Facebook transitioning to Meta is making a big push to be at the top of the development of what happens with the metaverse. Matterport stocks huge runway. The opportunity there is quite large. There are 4 billion commercial buildings globally that collectively own about 20 billion unique spaces. Matterport currently earns about $1.50 in revenue per space per month. At that rate, Matterport's long-term revenue opportunity is $360 billion versus just $111 million reported in 2021. So a very significant upswing and potential for the company. And if they can deliver, it's going to pay out huge. Spaces under management growth is slowing from 75% in the second quarter to 63% in the third, with 56% being reported in the fourth. Average revenue per space per month is dropping as well. Revenues rose just 14% in the fourth quarter, and worse yet, they're expected to drop 2% next quarter. Does that sound like a hypergrowth company to you? At issue are two things. One is supply chain issues, limiting Matterport's production capacity of its cameras, leading to a drop in camera sales. And the second, Matterport has made its smartphone capture software so good that it is cannibalizing demand for its cameras. The result is a sharp drawdown in Matterport's product sales, down 22% last quarter, which is the main driver behind its growth slowdown. While I think there are a number of significant developments happening with Matterport in particular, they are a company that is just starting to come to fruition, and I think in the long term, they will be able to deliver. And so that's why for me, when we go over this price per share that it's currently at, it's a time that I want to buy in heavy. Now, another article in Motley Fool, one monster metaverse stock with 481% upside according to Wall Street. Now, it's also talking about very similar aspects, the underwhelming fourth quarter results, the company seeing strong adoption of its software products, and while there are still hurdles ahead for Matterport, if the company can overcome those, it could be a great investment. And that's what I'm hanging my hat on. Matterport had a rough quarter, but the company still has the opportunity to capitalize on this massive market. Long-term investors should pay little attention to Wall Street analysts' price targets, since these targets are only based on a 1-year time horizon. However, when an analyst is projecting incredible upside in just 1 year alone, it might be worth taking a look at the stock. Wedbush analyst Daniel Ives set a price target of $38, implying 481% upside from the stock price as of this writing. So covering some of the silver linings, growth was still strong for Matterport in its fourth quarter, albeit not as strong as some investors had hoped. Its software subscription, the company's largest and highest margin business, grew 32%, as we previously covered. There were also other important highlights over the year for the company. It announced that its product can be used on Android devices, where it had previously been only available on iOS devices. This allows for further creation of digital twins of their spaces and easily bringing spaces to the metaverse when the time comes. Accessibility for the average person will be critical in gaining metaverse adoption, and so this will be a big part to do with that. And even if the metaverse does not pan out, Matterport still has a very strong roots in real-life industries. And those have been covered previously, and I still see that there are yet to be other growth drivers out there, or ways that they can branch out and really continue to develop and build revenue for this company. The company now trades at some of the lowest prices it has seen since going public, and many investors like Wedbush analyst Daniel Ives have high hopes for the company. If you can hold Matterport in a diversified portfolio of stocks for the next decade or two, this company has the potential to be one of your biggest winners if it can become one of the primary tools that consumers use to build out the metaverse. So let's take a look at the price per share. You can see $6.98, down 53% in the past 6 months. And you can see that they are way under when they actually came out through their SPAC reverse merger IPO. And so it's been as high as $33 in November of last year and made a significant downward turn since then. So even just the last year alone, down 61%. And I think personally, as I covered in my last video, that anything under the $16 mark, especially being at under $10 now, is a very good time to really load up and pack your bags for the future. So I would love to hear others' thoughts below and share in our wealth of knowledge as investors and building out the YouTube community. And as always, if you've gotten value out of this video, hit the like button. And I'm continuing to try and build the number of subscribers I have and get to that next milestone. So right now I'm almost at 150 subscribers. Would love to get to 1,000 subscribers in 2022, but that's with each and every one of your help. Hitting the subscribe button, turning on that bell, and sharing my videos with others. Let's make this a great year in 2022, even given all the volatility, and look for those opportunities to buy for the future and really build out your path to financial freedom. Until next time, don't just survive, thrive.